Hello, everybody. This is Noah and John, and we are from UrbanDigs, and it is Friday. So you're going to get your weekly Manhattan market update. Johnny, let's get right to it. I'm looking at supply. Am I seeing things? Is at 6,966. We broke the 7,000 barrier on the downside. Crazy stuff. Show me the chart.
I mean, no, you might be seeing things. I guess that's a question for your optometrist. But yes, we are below 7,000. That is another drop of 1% from last week. I mean, it's just supply is falling here.
Yeah, and John, we have been talking about this. It looks like it might be starting to happen. It's an interesting dynamic. If you're in the streets of Manhattan real estate, you're certainly feeling it. Let's just move on with the show. We got a lot of good stuff to talk about. Pending sales, the measure of demand came in at 4163. It looks like it just keeps going up. Johnny, show me that chart.
Yeah, there you go. That's a 3% from last week. I mean, it's sort of a broken record here that supply is going steady, ticking down, and pending sales is ticking up. So same new week, same story.
You know, 1 year ago, John, we were a broken record on the downside. You know, we report honestly. We're Switzerland here. We're neutral. If the market's going down, we're going to report it. If the market's going up, we're going to report it. It was a broken record last year. I really don't care if we're a broken record this year. The market is on fire, and this broken record can stay as long as it really wants. Okay, let's move on to the weeklies and peek around that corner and see if that broken record is going to keep on twirling. I'm looking at supply. It came in at 360. That's a low number. Show me that chart.
It is, and it's surprising because here we are in the middle of the busy season. You would think that supply would be elite, staying over 400 a week, but last week we were below 400 and 383. This week 360, so we're even below last week's number. So it seems like sellers have gotten the message in my book to like, you know what, let's hold off, let's let this market go, and let's see what the buyers think.
The buyers are just doing their thing. I'm looking at weekly contract signed. It came in at 344. That continues to go up. And people have to understand when you're at a weekly pace this high, it's not easy to sustain that. You need a ton of deals coming in the front end every single day to sustain it. This is unbelievable. Johnny, show me that chart.
Yeah, I mean, it's incredible. This is, I think, the fifth week over 300 deals signed, and it's the highest one yet, 344. It's, last week was 341. I mean, it's just it's gangbusters. These are white hot numbers. Don't mistake that.
Yeah, and think about all the deals that have offers accepted or have deals that are out that are waiting for the attorneys to get all the due diligence done to sign them, for the brokers to update that in the system. There are still a lot of those out there. And John, I just want to show you one thing on my market ticker here. This market pulse has been in a neutral market for a number of weeks now. And at some point, we're going to wake up, and I have a feeling that's going to be a seller's market. So let's just keep an eye on it. It's crazy stuff. And let's move on to the really good stuff. All right. I don't want to, put lightly what happened in March, John. I mean, this is incredible. This is what is powering the recovery in Manhattan. What you're looking at here is monthly contract activity, total deal volume on a monthly level going all the way back to 2004, right? Yeah. So, I mean, this is a lot of data here. And if you look at this chart, John, we just booked the second best month, and you have to go all the way back. What is that? March 2007 for the last print, just to show you how impressive this is. And this is why we're acting this way. So, John, what do you think here?
No, I mean, it's incredible. And I would not have even thought that this would be the second highest month last week. Yet here we are. It's really been amazing to watch.
Yeah, and that's why we say, how could this sustain itself? So it's a very interesting dynamic. So in terms of liquidity, this market is back. Now, liquidity is one thing. Price action is the other. What are prices doing? So we've been asked this a lot from people is where are we in terms of prices? Where have we come from? Today, we're going to look at median sales price. Okay. We'll look at price per square foot next week. Today's median sales price. All right. And this is what the chart looks like. The blue lines are your median sales price. And we like to do it at the time of the deal. At the time of the deal. So this is kind of as real time as you can get. So it will kind of follow the flow of what the market has done. And then we added the 3-month average here. And John, what do you see here?
Well, it's an interesting way to look at things. And I should sort of, preface this whole thing by saying that, the reason we're doing this is because this week, next week, you're going to get a lot of quarterly reports coming out, and you're going to be seeing a big discrepancy between average price and median price. And a lot of the average prices are going to be down 10%, 12%, somewhere in that range. And the median price is going to be down like, maybe 2, 3, 4, 5%. Like there's a discrepancy there. And that has to do with the amount of units sold and what their price points were. It's more of a statistical fluctuation than anything sort of reflective of the market. So we wanted to kind of show you, well, what's happening in the market. And we wanted to show like, well, where did we come from, which is right here. And you can clearly see that, the downtrend started back in, what was that, 2017, I think was the peak in terms of, price action at the deal time.
Yes.
And we've just been coasting down there. And then, clearly it hit a low in COVID and we snapped back.
Yeah. And it really does visualize what we've been through. I will use one word of caution here. I think that this uptrend in the 3-month moving average that I'm looking at, and if I draw the line right now, okay, bear with me here. I don't want to, be negative and rain on someone's party here, but if you draw that line across, it gives the impression that we're kind of all the way back at 2017. I do not think that's the case, John. All right. And I think the reason that that's happening is because we had one big print. We had one big print in November. Okay. And this is just the data coming in. So that is pushing this average up a lot. If you look at the subsequent 2 months, right, we're back down at this level right here. So all we really need is future months to come around the same kind of level here, right? Yeah. And this red line is not going to be up at this level. This red line is going to be back down to this level, which again puts us back to kind of mid 2019 levels. A big difference. Like 1 month is not a trend make. That's why I'm saying here, I got to be cautious. I think that this market is closer in terms of pricing to back in mid 2019, maybe early 2019 levels. I think we've recovered a little bit in terms of that. I do not think that we've recovered more than that. So the data will show it over time, but that's what I'm thinking. Okay. Now, I want to give you one last perspective of this. John, explain to everyone what they're looking at over here.
Well, so, we basically took the chart we just looked at and sort of we're zooming in here. And so now it's sort of like, all right, well, what exactly is the COVID hit? How did prices react to that? So we looked at that red line in the previous one, that's a running 3-month average. And we just sort of like, based monthly median prices at the time they happened, which is, if you signed a deal in February, we're counting it in February. And we compared those monthly prices to that running 3 months average as it was in January 2020 to kind of see that destruction as it happened in real time. And so that's what we're looking at here. So clearly the green bars are showing a tick up and the red bars are showing a tick down. And that COVID moment is clearly there. And it looks like we hit the lows like May 2020 down like 14 or so %.
Yeah, I mean, look, we're again, the 3-month average that we started at in January before COVID was 1.025 million. Okay, let's just be very clear here, right? Yep. November, December of 2019, January 2020, pre-COVID, take that whole average, $1.025 million. Since then, you can see what's going on. This is the rubber band effect right here. This is that rubber band effect. This is what I'm worried about. You see the snap back, you see the snap up. I think this is an extreme that's going to actually normalize a little bit. That was that November print that I was worried about in the previous one. I think it's going to be more like something like this of where the market is right now. But that's what happens in times of craziness. When you go deep in one level, you're going to go snap back into the other side. And I think that's what's going on right now. It might take another 4 to 6 months to normalize all this stuff.
Yeah, you're right. And just kind of bring this back full circle. So if you're looking at the quarterly reports and you're seeing average price, median price negative, don't forget these are a rear view mirror approach to what happened 3 to 6 months ago. So, looking at this is a much better way to understand that, yes, COVID took the hit, but, for all practical purposes, the market is back here.
The market is back. Well, we're going to continue to report on it. Thank you, John Walker, for bringing up all these stats. I am Noah Rosenblatt. We're both from UrbanDigs. If you got questions, we got answers. Look at our forum. We will get back to you. Other than that, have a great weekend, and we'll catch you next time.